Hello dear student, welcome again. I am Dr. Boraste, Department of Commerce from KTHM College Nasik. Today I am going to discuss with you the practical example number 3 of piecemeal distribution of cash, under which we will study how to pay the external liabilities as per the proper payment and priority method. Let us see problem number or example number 3 of surplus capital method under the topic piecemeal distribution of cash. So here you can take a screenshot of this example or you may write down it in your notebook or paper. So problem is what? Following is the balance sheet of Messrs A, B and C as on 31st December 2019, sharing profits and losses in the ratio of 2:2:1. Balance sheet is given. On the balance sheet, on the left hand side there are liability, on the right hand side there are some assets. So we have to pay this liability out of selling of these all assets. It is called as dissolution of partnership firm by using a piecemeal distribution of cash through surplus capital method. So here are assets, here are some liabilities. Capital is there, bills payable is there. On the asset side, sundry assets, stock, debtors, cash and bills receivable are there. We have total 3,68,000 liability and assets. The partner decided to dissolve the firm and the assets were gradually realized. It means partners have voluntarily decided to dissolve the firm and they realize the assets as on 1st February they got 80,000, on 1st March 1,20,000, on 31st March they got 72,000. You are required to prepare statement showing surplus capital and statement showing distribution of cash as per proportionate capital method. Proportionate capital method is also known as surplus capital method. As we have already seen, there are various nicknames for this method. So let's start the solution. First of all, you have to calculate surplus capital. What is surplus capital? As I earlier said, surplus capital means what? The partners out of these three parts, suppose in case of this example, there are three partners A, B and C. The person who have paid more money as a capital for the partnership firm is called as excess capital or surplus capital. So here we are going to calculate the person who have paid the more amount to partnership firm. So what is the formula, what is the solution and how we can calculate the surplus capital method? So let's start. First of all, you have to prepare a statement showing surplus capital. Let's take a note or a notebook, and in that notebook you prepare this column. Serial number is the first column, particular is the second column, then capital A, B and C, these three columns. That means there are at least three columns for partners, one column for particular and one column for serial number. Okay, have you drafted? Okay, let's go. If you have prepared this column, now let's start our solution. First of all, in a first line, write down capital balances as per balance sheet. So here in the balance sheet there are capital of A 120, capital of B 96,000, capital of C 32,000. So here I have mentioned 120, 96 and 32,000 as a capital. Then you have to mention profit sharing ratio. In a practical example or problem, there is a ratio that is 2:2:1. So we have put here the ratio 2:2:1. So it's very simple. Both the figures are from balance sheet, that is balances as per balance sheet and profit sharing ratio. Our third step is to calculate unit capital or unit value. As I earlier said that you can calculate unit capital by dividing the capital by the profit sharing ratio. As I already explained that unit capital means what? For one unit, how much amount is given by a partner as a capital. Say for example here, Mr. A gives 1,20,000 for 2 share, Mr. B gives 96,000 for 2 share and Mr. C gives 32,000 as a 1 share. That means here we are going to discuss how we can calculate unit capital. So 1,20,000 divided by 2, it comes 60,000. 96,000 divided by 2, it comes as 48,000. That means for 2 share Mr. A gives 160 and for 1 share Mr. A gives capital of rupees 60,000. Mr. B 48,000 and Mr. C 32,000 divided by 1 comes to 32,000. The next step is we have to calculate proportionate capital. So what is proportionate capital? Means what? A person who have paid a less amount, it is called as a base capital. Here Mr. C gives 32,000 for one share, Mr. B gives 48,000 for one share, and Mr. A is given the capital to partnership firm for of 60,000, that is for one share. So out of these three figures, we have 32,000 as a less capital or as a less amount or as a less share. So I have make here a red color or red font for what? For ascertaining that it is a base capital. So the next step is proportionate capital. Proportionate capital means what? Base capital into the particular person or partner's profit sharing ratio. So base capital means proportionate capital means base capital into profit sharing ratio. So here base capital is 32,000 as it is the least amount from these three amounts. So next step is proportionate capital. Formula is very easy, base into PSR. So base is 32,000 and we are going to multiply by its profit sharing ratio. So multiply by 2, it comes to 64,000 for A, 64,000 for B and 32,000 for C. So it is our proportionate capital. Now the next step is surplus capital. So how we can calculate surplus? Surplus capital means capital. Here we have a balances of Mr. A, B and C, 1,20,000, 96,000 and 32,000. We are going to deduct the amount which is proportionate capital. So that is A. The A is a row and D is another row. So we are going to deduct we are going to deduct D from A. So 1,20,000 in case of Mr. A minus 64,000. The answer is 56,000. 96,000 minus 64. The answer is 32,000. So the surplus capital of A is 56,000 and B is 32,000. Now we are going to repeat all these steps: capital, profit sharing ratio, unit capital and proportionate capital again in the next line. Why? Because we got here surplus capital of Mr. A and B and we have to calculate a single person or single partner who have given the maximum share or extra share as called as surplus capital. So again we are going to repeat all the stages. First of all, profit sharing ratio. So profit sharing ratio, as I earlier said or earlier mentioned in the profit our upper line, that is 2:1, but here Mr. C's balance becomes nil because he gives 32,000 and his proportionate becomes 32,000, so balance will be nil. Now we have to repeat all the stages for Mr. A and Mr. B only because C's share is now nil. So 56,000 divided by 2 and 32,000 divided by 2, we will got unit capital. Same whatever we have done over here in the row number 18, that is C or C row, we got 60,000, 48,000 and 32,000 as a unit capital. So again we will got here unit capital. So 56,000 divided by 2 comes to 28,000 and 32,000 divided by 2 it will come 16,000. So balance, it is called as unit capital. Now you can see here the proportionate capital. Proportionate capital is what? Proportionate capital is base capital into profit sharing ratio. So here we are going to consider a minimum amount which will be considered as a base capital. In this case, the base capital will be 16,000. Why? Because it is a less amount and we can consider it as a base capital. So base capital is 16,000. 16,000 into 2, the proportionate capital will be 32,000 for the case of A, and for the case of B it will be 32,000. So now we can calculate absolute surplus. Absolute surplus is E minus H. That means E means surplus capital, H means proportionate capital. So 56,000 minus 32,000, it comes as 24,000. So now we got a surplus, absolute surplus capital of Mr. A, that is 24,000, and surplus capital of Mr. A 56 and B 32,000. So in this way you can calculate the statement of surplus capital, absolute surplus and surplus. Now just turn to a priority of payment. As you know, piecemeal distribution is what? It is a payment to liability holders. So we have a liability of bills payable. You can see in the example bills payable and capital. So third party is only one liability, that is bills payable. So first we have to pay bills payable, that is 1,24,000. After the payment of bills payable, we can pay an amount to Mr. A, that is 24,000. So the second number in a priority is 24,000. After payment of Mr. A's capital, that is surplus, absolute surplus capital, we can pay surplus, that is 56,000 to Mr. A and 32,000 to Mr. B. But here you can see 56,000 to A and 32,000 to B, but already out of 56,000 we have paid 24,000 in the earlier step. So Mr. A will get 56,000 minus 24,000 equal to 32,000. So in the third stage, Mr. A will get only 32,000. As why? Because he already received 24,000 as absolute surplus, and now he will be received as a 32,000 as a surplus capital, and the B's amount will be remain same. After payment of all this liability, if your organization have some amount or your firm has some amount, at that time you can pay that amount to all partners in profit sharing ratio. So after the priority of payment list, you can go through a statement of piecemeal distribution. Let's start the piecemeal distribution. In this case, we have to prepare some columns. So first column is debt, second column is particulars, third column is available cash, whatever cash you have, fourth is bills payable. After that, you can prepare three column of capital. So this is statement showing piecemeal distribution of cash as per surplus capital method. Let's start the solution. First of all, you have how we can consider the number of columns. Just go to priority payment or problem where you have a liability. As per that liability, you can prepare a statement showing piecemeal distribution of cash and its column. So cash is must, as whatever cash we have. Total liability is different column is new column. It is important why later on I will discuss about that. Bills payable is the only one third party liability. Otherwise, we have only capital to pay in this case. So let's start with wrongly I have mentioned here the date, that is 2019. It's actually 2020. Okay, now you can solve it. So first of all, what you have to do, you have to consider the capital balances as per balance sheet. So here balances as per balance sheet. Cash is 16,000. Third total liability is 3,68,000. How it comes, we will discuss later on. Here you can see the various liabilities. So first one is bills payable, second one is A's capital, then B's capital and C's capital. So these are the balances which we have taken from the balance sheet. Now you can directly pay the first liability, that is third party liability, bills payable. Its amount is 16,000. So in this step you can pay 16,000 because we have 16,000 and we have to pay priority on priority basis bills payable, that is 1,20,000, but we don't have that much amount. So whatever amount we have, we will pay directly to bills payable. So in this stage, less bills payable paid. So 16,000 cash will be reduced, 16,000 total liability will be reduced, and 16,000 bills payable will be reduced. So here in the next step you can calculate balance. So balance comes to cash will be 0 because 16,000 was even in our hand and we paid 16,000. So the balance cash will be 0. Total liability will be reduced by 16,000 as we paid 16,000 for bills payable, and our bills payable will be reduced by 16,000. Out of 120 we paid 16,000. That means in our hand we have to pay at now in this step 1,04,000 as a amount of bills payable, and capital will be remain same because we did not pay a single rupee to them. In the next step we lost our we finish our all money, so we can call a realization. Realization means what? An amount which is received after selling of these all assets. Whatever assets you will sell, you will got some money. On the 1st of February you got 80,000 as a realization. So you will you can pay you can receive 80,000 as a first realization. So first realization comes to 80,000. After the payment of 80,000 bills payable, you can pay. What was the bills payable amount? It was still pending 1,04,000. In this case you have 80,000, still it is less amount. So total 80,000 will goes to bills payable. Here cash total liability reduced by 80,000 and bills payable will be reduced by 80,000, and we are not paying any amount to the capital holder. So total after payment of bills payable, our balance will be cash will be 0, total liability will be 2,72,000, and bills payable still remains 24,000. So in the next realization we will pay 24,000 to bills payable. So next realization is what? Next realization is 1,20,000 on 1st of March. So we will take a date of 1st of March 2020. Already it is mentioned in the first row, that is date 2020. We are going to just mention for date and month. So second realization is of 1,20,000. First of all, we have to pay bills payable. So that is 24,000. So less bills payable pay 24,000. Total liability will be reduced by 24,000 and bills payable will be reduced by 24,000. Now just tell me what will be the balance? Sure, it will be 0 because we paid all the amount, that is 1,20,000 to bills payable. So bills payable will be 0. Now out of 1,20,000 we paid 24,000 for bills payable. So balance cash in our hand, that is 96,000. Total liability will be remain 2,48,000. You can cross check meanwhile the total liability column is correct or not. Here 1,20,000 plus 96,000 plus 32,000. So it is correct. 1,20,000 plus 96 equal to 2,16,000 plus 32, it equals to 2,48,000. That means our calculation still this stage is correct, are correct. So now we have 96,000. Our next priority, here our first priority was bills payable, that is 1,24,000. Now our second priority is Mr. A, whose absolute surplus capital is 24,000. So we will pay 24,000 for absolute surplus capital. So let's pay to Mr. A as absolute surplus capital 24,000. So cash will be reduced by 24,000, total liability will be reduced by 24,000, and capital of Mr. A will be reduced by 24,000. As we are not going to pay a single rupee to B and C because it's the absolute surplus of Mr. A. After payment of absolute surplus to Mr. A, balance in our hand will be cash will be 72,000 and total liability will be 2,24,000 still payable. Mr. A's capital comes to 96,000 after the payment of 24,000. Mr. B and Mr. C's amount will be remain same. After the payment of absolute surplus, we have 72,000. Now the next step is, that is step number 3. We can pay surplus capital, that is Mr. A rupees 32,000 and Mr. B rupees 32,000. So we have an amount of rupees 72,000 and we have to pay 64,000. That means we have a sufficient amount. So we can pay directly 64,000 to Mr. A and B in a part of 32,000. So next payment is paid to Mr. A and Mr. B as a surplus capital. Total is 64,000 as 32 plus 32. Total liability will be reduced 64,000 and Mr. A's amount will be reduced by 32 and Mr. B's amount will be reduced by 32,000. However, C is not getting a single rupee in this step. So after the payment of surplus capital, still we have 8,000 of rupees cash and total liability remains 1,60,000 and total capital of A 64, B 64 and C's capital is 32,000. That means we have an 8,000 amount. So in the next step, after the payment of surplus, we have already first step we paid bills payable. After that we paid surplus capital. After the payment of surplus capital, we paid to Mr. A and B. After payment of all these amounts, we have still some amount. So we can pay all the amounts in 2:2:1 ratio. So here we have 8,000. Now we will pay 8,000 to Mr. A, B and C in the ratio of 2:1. So 8,000 cash will be reduced. Total liability will be reduced by 8,000. And how we can pay 8,000? So equal to 8,000 into 2 upon 5. That means Mr. A will 2 plus 2 plus 4. So we have 8,000 and we can pay 8,000 to Mr. A in the ratio of 2, Mr. B in the ratio of 2 and Mr. A in the ratio of 1. So 2 plus 2 plus 4, 2 plus 2 4 plus 1 5. So we have to prepare a 5 part of rupees 8,000. So here we can calculate is equal to 8,000 divided into 2 divided by 5. So it comes 3200. Okay, that means 3200 will be received by A, 3200 will be received by B, and one share, that is equal to, here we can calculate share of Mr. C, that is into 1, 1600. So here Mr. C will get rupees 1600. So after the payment of 8000 in our hand, cash is 0. Still total liability is 1,52,000, and bills payable is already paid. A's capital is 60,800, B's capital is same, and C's capital is 30,400. Still we have one realization on 31st of March, that is 72,000. So we can call that realization number 3, that is 72,000. So in the next step, on 31st March 2020, we will call the third and final realization of rupees 72,000. This amount will be distributed among Mr. A, B, and C in the ratio of 2:1. So total amount will be reduced. So cash will be reduced by 72,000. Total liability will be reduced by 72,000, and we will distribute this amount in the ratio of 2:1 between A, B, and C. So equal to 72,000 into 2 divided by 5. So Mr. A will get 28,800, Mr. B will get same amount, and Mr. C will get 14,400, because his share is only 1. So it comes to 14,400. So our calculations are correct. Mr. A will get 28,800, Mr. B will get 28,800, and Mr. C will get 14,400. So these three partners are getting an amount of rupees 72,000 in the ratio of 2:1. So after the payment of 72,000, we have an amount in our hand, that is 0. So that means we don't have a single rupee. So still we have a liability of rupees 80,000 which is unpaid, and our all realization are finished. Third realization was 31st March, on 31st March 2020, and we don't have any kind of realization after this realization. That means we have paid sell all the assets, and we got this amount. So that means we don't have an amount. So it simply means that we have some loss, that is called as realization loss. After the payment of all the liability and capitals from the asset realized, we paid all the liability, that was only bills payable and partners capital. After the payment of that all liability, we have still 80,000 unpaid amount. So it is called as realization amount. In earlier stage, I explained that total liability column is important. Why it is important? You can cross check here the A's capital, B's capital, and C's capital, which is unpaid. The total of these three columns comes to 80,000. That means our solution is up to the mark and correct. In this way, you can solve the problem of statement showing piecemeal distribution of cash by using the surplus capital method. Okay, with this I would like to say thank you and conclude that in the next lecture I will discuss about with having more liability in liability column in this way. So okay, thank you very much.